I want to say thank you for having me. It's an honor to be here with you today. I'm inspired and invigorated by what is clearly a buzzing entrepreneurial environment and backdrop here in New Haven. A lot of ideas are born, hashed out, and promoted to the next step or phase, and I'm certain that we'll all be talking in a few years about some seriously innovative breakthroughs that we have started right here. As one person on my Tegu team will tell you, I love to dwell in the realm of possibility, and that's exactly what we're doing here today. So thanks again for the opportunity to be with you all. I want to start today with a bit of an academic thought, one that stretches us into the realm of accounting, actually. I studied finance at Indiana University, and as many of you can imagine, part of the core curriculum requires accounting. I think most people have this kind of blah view of the subject matter. Perhaps it's a bit prosaic and boring, if not soporific. Now, I personally think that accounting gets a bad rap. In fact, I think it's fair to say that pairing basic accounting knowledge with my creative interests was one of the most important things that's happened to me thus far in my career. Perhaps looked at from a different perspective, if you don't understand the anatomy of building free cash flow, it could cost you your business, no matter how much everyone loves your idea. Now, I'm going to hit accounting at the highest level here and hopefully provide just one insight that you can tuck away forever, something that should pertain to anything you do in the business realm, and it's this. When a business is initiated or a startup gets going, to make it all possible, capital is infused into the business, and that capital is exchanged for activity. Most of the time, that activity results in the acquisition, setup, and development of assets. These assets could be fixed physical assets, like machinery or equipment. They could be software or know-how assets, like an algorithm or an iPhone application. And in the latter instance, your asset is your code, and similar to a fixed asset, it isn't valuable until deployed in a useful way. Now, when assets are deployed as intended in a useful way, they eventually allow the company to sell a product or service. When this product or service is sold, revenues can begin. And I realize this is a bit elemental, but stick with me for a second. A customer exchanges their cash for your product. Then, when customers show up, as they do when forming a line at Chipotle or Shake Shack, you start to be able to cover your costs. Over time, as you attract more customers, your business grows, and hopefully, you're able to pay your product costs, your rent, your staff, and maybe even yourself a living wage. And when this happens, you hope to generate profit. Your revenues cover your costs. You have a shot at profit and cash flow, creating the much sought after positive return on investment. And if you look at the slide for a second, obviously we're all chasing the yellow, right? And this is a win. In fact, over time, if a business cannot generate positive return on investment at some point, Amazon, it won't be able to survive. So there you go. In summary, capital comes in, assets are secured, they're put to use, and they eventually engineer revenues. When the revenues grow, assuming you've priced your product appropriately, you cover your costs. And covered costs generate return on investment. To loop back to my opening point, I want to strongly emphasize that we're talking about accounting return on investment. Plenty of people have made millions of dollars owning Amazon, despite the fact that they've never turned a profit. And the only reason this has been possible in the absence of accounting return on investment is because the public increasingly believes that one day, someday, with their billions of dollars of revenue, they'll be able to cover their billions of dollars of cost and produce billions of dollars of profit. Similarly, and especially as it pertains to startups, valuations can grow handsomely in the absence of profit. Again, it's all about expectations and optimism for what's ahead, rather than a here and now demonstrated bottom line. So why does this matter? Well, for me, and perhaps for you, it matters because it highlights the critical nature of the wise selection and development of your assets. As you work to define and especially refine your business model, this is critical. Whether you're going to write code or make widgets, your assets are the transforming entities that turn raw materials into finished goods. And without some sort of transforming activity, your assets are useless, perhaps worthless even if you paid a lot of money for them. But in business model formation and asset selection, I discovered that I had an incredible opportunity to not only generate profit, but to also do good. In fact, in 2006, my brother and I began mulling over this idea, specifically to benefit the impoverished nation of Honduras. How might we address grinding poverty? With an unemployment rate of 30 to 40%, well above anything we've ever experienced here, even during the Great Depression in the United States, the country of Honduras was and is in need of opportunities that would put people to work. With these unemployment rates, as the thoughts and ideas about what to do flowed, we knew we had to build something that was scalable, and we felt it had to be a profit-seeking entity, and in our case, one that was actually going to export as well. So without a firm understanding of what we might do or make to create jobs to benefit the people of the country and generate a profit, we enacted what many entrepreneurs and professors would tell you is a bad idea. Rather than solving an unmet market need like Uber does, we primarily sought to solve a social problem. And we backed our way into a business. In fact, we started looking at the resource base in Honduras, thinking about which commodities had value. Honduras was the banana republic, if you didn't know, and is producing some of the world's finest coffees. It's also densely covered with dozens of species of wood that have never seen the light of day in terms of commerce. As we started to look at the forest assets more closely, we realized that there were dozens of species that basically had no English names as well. You may be familiar with Honduran mahogany. It's world famous. But most of these other ones you would never notice. So not only were they unused for commercial products, they were even unknown entities. It's as though they didn't exist at all, and yet they were everywhere. Yet literally they just weren't on the map. So we began to dig into this industry, brainstorming on the possibilities, and without going into all the details, we determined that we would indeed enter the toy industry and strive to out-innovate the incumbents with a better mousetrap. Our mousetrap is a magnet-filled wooden block. And we built a system of play which offers this block, perhaps the most iconic of children's toys, but with a gravity-defying and animated twist. When the blocks come out near each other, the rare earth magnets sitting inside them offer attracting and repelling forces. Get a bunch of these blocks together and you have a world of possibilities in your fingertips. I'd be lying if I didn't tell you that we're out to build a better Lego. And our vision is to build the world's most innovative premium toy company. Now, coming back to assets and accounting, here's the catch. Our business model required hard assets, wood machining assets, assets that transform these beautiful woods into toys with magnets inside. Add raw materials, some people to operate the equipment, a facility in which to do this, and not only do we have a potential business on our hands, we had developed a supply chain which sourced wood sustainably and offered jobs to hardworking people. That was 2010, and we started with 12 people. Today, the factory now runs 20 hours a day, 6 days a week, across 2 shifts, employing 150 people. And I am humbled every time I visit and see their tremendous progress. And frankly, this would not have happened unless my brother himself had been willing to move to Honduras. I should have mentioned before, he's my co-founder. But back to the assets and the accounting. Well, what I'm hopeful you'll take away with you today is this. When an asset is paired intelligently with a social concern, you can build a business model that inherently benefits others while earning a profit. In our case, the more blocks we sell, the more production we need, and the more production we need, the more people we employ. Let me give you a real quick illustration of what I mean when I talk about this asset pairing idea. Up on the screen, you can see 2 bar charts, okay? On the left, you've got the export of a container of raw mahogany. Just imagine you cut lumber, you throw it in a container, and you ship it to somebody else somewhere in the world who wants to mill that container of mahogany. On the right, you've got a container full of our blocks, also made of mahogany, but not always. Now, if you look at the chart closely, we've got a 20-foot container, both of which are full, okay? And if you look at the red slug in the bar chart, that's the profit potential of each of the containers. So on the left, you have what I will call a dumb good being basically exported. There's no value addition within the country. You cut a commodity, you source the commodity, you ship the commodity. What we do is we obviously take that commodity, and before it escapes the borders, We put it to work. And we put it to work in the factory with the assets, which I mentioned before. And we put people to work in the process of transforming that mahogany into a value-added product. And so when you look at the profit potential between the two scenarios, ultimately what you can see is you want the red on the right. And actually what we found is there's about close to 10x the profit potential of turning that wood into toys. Now I want to pause here for a second. That wood, that sort of container of mahogany could have been shipped out to another toy producer somewhere else in the world, right? So in some respects you could argue, well, at some point wood is transformed into a usable product somewhere in the world. But what we were saying is we had a social concern which was local to Honduras where we had to put people to work. We wanted to do this. We wanted to address poverty in a thoughtful way. So we said, okay, we're going to capture these assets, and before they leave the boundaries of Honduras, we're going to basically turn them into a different type of product. Well, what do we do with the red bar? We put people to work. We pay living wages, and we basically return investment to our shareholders. Now, I think it's important to mention this is not a novel concept. In fact, this has been happening throughout history. And if you're at all familiar with models like the Guinness Brewing Company in Ireland or with Cadbury's chocolate, this has happened many times before. One of the things that I will say is not happening much is actually foreign direct investment into areas where it's high risk. You know, Cadbury's chocolate basically set up a business which would produce jobs for folks who were living and working in the slums of Birmingham, England. They set up a village. They set up a factory within the village. People were able to move out, afford homes. It's a tremendous model. Well, today, those jobs have gone offshore, as I think we all know. And if you look at the opportunities around the world, one of the things we're trying to address is investing in regions which are otherwise overlooked for a variety of different reasons. But finally, because we're here today celebrating entrepreneurship, ideas, and innovation, and I want to say that I'm just so excited to hear that there's risk capital being awarded. You know, this is a critical part of essentially getting businesses past the word go. I want to speak for a moment a little bit about life risk. Of course, many entrepreneurs and investors could be classified as risk-seeking folks or risk lovers. This group of people recognizes that there is potential gain in risking loss. The goal is to make calculated bets, to win some knowing that you will lose some, and hopefully to come out ahead. In the venture capital world, it's often just one home run that drives returns in the entire portfolio of investments. In entrepreneurship, you often hear of investors only wanting to back somebody who has already failed. There's a comfortable expectation of trying and even losing when it comes to startups, and that mentality is what sets Silicon Valley apart from any other part of the world when it comes to innovation. But what if we were to talk today about life risk? And what I mean by this is really thinking hard about your life, what it's all about, and ultimately grappling with the risk you are or you are not taking. For many of us, these risks may be hidden, but we know them when we reflect on our life at a deeper level. And what I'm talking about here can be best explained by the experience that I had when deciding to leave Goldman Sachs. Without going into all the details, I joined Goldman Sachs right out of undergrad. I was delighted to have this opportunity. I'd spent 2 years as an investment banker, working the crazy hours that I'm sure many of you have either experienced or heard about. And then I was privileged to join one of their principal investing groups, putting a lot of money to work. And I think it's fair to say that I really did land a job that I had worked really hard to secure. And I suspect some of you in this room are looking for opportunities like that. But ultimately, I did, in fact, leave that job, leave that opportunity to start Tegu. And I didn't leave because I didn't like what I was doing. In fact, I loved it. I left ultimately because of what I wasn't doing. I wasn't an entrepreneur. I wasn't tackling social challenges that I had aspired to thus far. And I wasn't really using and deploying the gifts and talents and opportunities that I really felt I'd been given. As I looked out at my life, I'm pretty sure I could have been very satisfied remaining in finance. The pay is tremendous. And just on that note alone, when we think about the risk, we think about risk as what might result if something doesn't pan out. I know my parents thought it was crazy to give up what I had going at Goldman. But folks, I don't have to be the one to tell you that money isn't going to buy happiness. So much of our lives suggests, though, that this is in fact the case. We are allured to the best jobs that pay up, But then there's life, your life. And what will you do with the gifts, talents, and opportunities that you've been given? And I'd like to suggest that you're taking life risk if you simply follow the money train, the highest probability path to wealth. When I began to struggle with the choice of whether or not I could really leave Goldman, I had this simple but powerful insight, and I want to share it with you because it's stuck with me ever since. And it's this: businesses exist because people determine that they should. Yep, it's simple. Look around you right now. Everything you see in this room exists because some person at some point in history said that they determined that it should exist. The chairs you're sitting on, the desk in front of you, the microphone in front of me, the technology behind me. There's a person in history behind each of these things. And the things that you don't see, the ideas that never got born, many of those could be in the category of what I'd call lost opportunity. No risk, and therefore no gain. In essence, we just cannot comprehend what doesn't exist today that should exist. We don't know about all the ventures that were never started. But what you do know is how you derive your personal utility. It might be as simple as a good workout, an A in a class, or a great group of friends or family. I'm going to argue that all of you have a worldview, whether you know it or not, and that everything in your life logically springs forth from this view. And so today, when you think about your life, look at the things that give you a sense of worth and consider them signals which point to what really matters to you. Today, I challenge you to reveal what's beneath the utility. What's the source of your true joy? And when you find that thing, grab it, hold fast, and pursue it with all resolve. This doesn't mean that you have to change your career track or take silly risks, but it does mean that you might just reframe the course of what your life is all about. And in this process, if just this room of people does this simple thing, I am certain that amazing things are going to happen. So dig down, find your worldview, get intimately familiar with it, and pursue those things that should exist because of your determination. Okay, guys, I'm not really sure how much time we have, but I would be, 10 minutes. Happy to answer any questions if you have them. Happy to delve into the business model further if that's helpful. So, fire away. Yes?
What is the revenue of Tegu now, and are you profitable, and how did you zero in on Honduras?
Yeah, I'll start with the end and then come back to the beginning. We zeroed in on Honduras because we grew up doing work overseas. It was just part of our family. We were interested in humanitarian work. We happened to be Christians doing missions work. And I think for us, like many people, you get a personal contact with someone and it strikes you at a deeper level and you say, okay, I've been exposed to poverty or whatever the issue is, and you say, I've got to do something about this. And as mentioned, we were business people. My brother was management consulting at the Boston Consulting Group, and I was at Goldman. And so we felt that the best way to address their concerns was a market-based solution. And Tegu, just so you're aware, Tegu is short for Tegucigalpa, Honduras. It's the capital city, and it's just outside of there that the factory is located. Revenues will hit 10 million this year, and we will be profitable. This is our breakout year, basically. And I was telling someone earlier we had a record first quarter, and I guess just to the last presentation, I think Tuckerman, it took us 4 years to get to 5 million. So it may not seem ambitious, but when you're trying to do something hard, those first few years can sort of feel a bit stunted, and that's certainly how I felt. And I'm pleased to say we persisted and kind of off to the races now. So. Yep.
Did you and your brother quit at the same time?
No, actually, it's interesting. My brother left Boston Consulting Group in 2007, started working from home in his living room in LA. He was doing side gig consulting jobs, trying to just pay bills. And then because I happened to be in a fairly comfortable position at that time, I was essentially funding the development costs, and I left a year later. So he left in May of 2007, I left in May of 2008, and we launched the company with our first round of funding in May of 2009. So.
Are you both from Darien?
What's that?
You're from Darien?
No, we're actually New Zealanders by birth, but we grew up in St. Louis, Missouri.
And so what was Darien mentioned?
Yeah, so Darien's the headquarters of the company.
Okay.
Yeah, yeah, that's where I live now, or Rowayton, as said earlier, which is next door. Yeah. Yeah.
I'm from there.
Are you? Okay, great. Yes.
Where did the idea for the company come from? Like, how did you get from timber to this toy?
Yeah, great question. We started noodling on this idea of using timber, right? So what could we do with it? And I think that this is just our background. Grandfather's an architect. There was always a workshop in the house. I took shop, and my brother did the same during high school. It's just something we were inclined towards. When we started thinking about the usage of wood, we naturally thought furniture, flooring, cabinetry, traditional products. We happened to be soccer lovers as well and ended up in Germany for the World Cup. And when we were there, there was an American living there who said, you guys are thinking about using wood. What about wooden toys? And at the time, I'm at Goldman thinking, that's the most cluttered, traditional, no-win situation industry you can imagine. But as we looked at it further, one of the things that I felt was really exciting about it was if you could actually carve out a property for yourself that was timeless, then you actually had an evergreen revenue stream on your hands. So we had to basically build, as I said earlier, a better mousetrap. And so you had all of these traditional wooden toy companies, the second, third generation German, super high quality. You had the lower end producing out of China. And our perspective was, let's do what a lot of American companies have done, which is you take something that's been done at a really good craftsman level in Europe for many years, and then get innovative with it and turn it into something that's more fresh and clean, modern. So we went and studied kids in Silicon Valley kindergartens at all of these privileged schools. And what we began to see was basically, we knew we had to use wood, and we took in, of course, every toy you can imagine on the market just to see what happened, right? And kids love magnets. Magnets are fascinating, they're invisible, they're magical forces. These are permanent rare earth magnets, so they're super powerful. And really, I didn't go through any of the detail, but we've achieved a patent on the manufacturing process because the magnets sit about a millimeter under the surface of our toys inside. And when you're producing at scale, today we're producing about 17,000 blocks a day. And when you're doing that, putting each magnet a millimeter underneath the surface of a material that has to be machined, okay, is very challenging. So unlike injection molded materials, this is not something you can just pump out of a mold. This is something that has to be each part machined. And it's been a very challenging process. And frankly, to my point earlier, we would probably be $15 or $20 million business today if our manufacturing wasn't so complicated. But that's where I think the opportunity is. Ultimately, we have a timeless product, which is dirt simple to appearance, but intensely difficult to make. And we think that ultimately that will be the sort of nature of our competitive advantage. Other questions?
If you guys could please hit the microphone before you talk. Thank you.
I'm curious if you could just continue to speak about competitors. We hear as entrepreneurs all the time, what about the competition? They're going to throw 100 people on this problem and solve it in a day. What do you have that they don't? And so as you've actually experienced it being out in the market, do you find, at least for your specific business, that it's been true? I mean, are people trying to emulate what you're doing? You have a patent, but
Yeah.
I'd still love to hear your thoughts.
Yeah, it's interesting. So we started direct-to-consumer only. We found that digital marketing was incredibly challenging and costly. We didn't have the team for it, and ultimately we started getting the attention of folks like Pottery Barn and other places. So we pivoted and decided to open a wholesale market for our business. It changed the pricing paradigm and the margin structure of our business overnight. I mention that because in that process, though, it began to attract people to the product, and we started attending trade shows. As we did that, people began to get interested, and you would have folks coming over to your trade show. They'd pick up your product, and they would just inspect it. And these are people within the industry. So you're casting a wary eye, right? And thinking like, well, who are you with, and why are you here, and why are you looking at my product like that? It's a certain like product affection, it's just kind of very nerdy. But then we heard that people were trying to copy it. And folks who had more resources and ultimately what I would say is they couldn't. And and again, I didn't spend too much time on this, but they couldn't. It's not that they couldn't because our patent had already been established. Ultimately, intellectual property is just it's part of an opportunity. In fact, if you look at our patent, which anybody can pull up online, it demonstrates and draws a whole bunch of things that could be done to make our product, but it's not actually what we do. So the whole purpose of that was basically to put up a red herring and say, look, public, this is how we make our product. By the way, you can't do it like this. But privately, we've been developing a bunch of trade secrets inside. I'll finally finish by saying that what my encouragement would be is to do something that nobody else can do. And usually that's hard work, and usually it can stunt your growth. And sometimes it means your incubation period is 3 years, not 6 months. And in many respects, I would argue that people would say that that's unacceptable from a venture or from a growth standpoint. But when you think about the things that basically stand the test of time, they have to be fundamental innovations, right? And so, the best example of this in our industry is Lego, right? They started as a wooden toy company in 1939. They pivoted 14 years later to the brick, okay? Injection molded brick, and it's the same brick today, right? Yeah, sure, advancements in innovation and manufacturing, branded properties, all these types of things, but ultimately, our goal, and I think, I would encourage all of you in competitive industries, you have to do something that no one else has done. And if you basically try to compete on the basis of what other people do better, it's going to be more expensive for you and likely less profitable. So in our case, we didn't know this, but we had to essentially tackle an incredibly challenging manufacturing problem. And once we tackled that, basically we set up to be and to corner the magnet in wood market, right? We don't know how big that market is, but ultimately we're going after it, and we're going to push the ceiling of what's possible. So, other questions?
Thank you, Will.
Yeah, thank you.